HELOC can unlock the equity in your home without having to sell it. They can be incredible if used right, or a nightmare if used wrong. So today, my guest and I are breaking down in plain English what a HELOC is, how it works, and the top smart uses. But before we do, lock in and hit the like and subscribe button. You're listening to Financial Sense, Arizona's financial podcast that gives you insights that you can only get from a friend in the business. Recorded and brought to you by National Bank of Arizona, the bank of the community. Hello, I'm Margaret Paddock. I am the director of the private bank here at National Bank of Arizona. Thank you for joining us today. Today, I have a returning guest, Greg Bird. Greg is the area manager and the head of our mortgage department here at National Bank of Arizona. Welcome back, Greg.
Thank you for allowing me to come back. I have the first one under my belt, and hopefully you'll invite me back after the second one.
Time will tell. Today, we will be talking about home equity line of credits, affectionately known in the industry as HELOCs. Tell me, what is a HELOC?
Margaret, a HELOC is a mortgage that works like a revolving line of credit, and it's based upon the equity in your home.
How does it work?
Here's how a HELOC works. So if you look at the value of your home, and you typically have your first mortgage, that will be a percent of the total. The lender will then look at this HELOC and that remaining equity, they'll lend you money based upon that value that you have in your home. A HELOC is typically going to have a period of interest-only payments where you can draw any amount up to your limit over the first 5 to 10 years. Once the draw period ends, you'll go into a repayment period that typically will be 10 to 20-year period.
So it can be confusing, and there are a lot of different kinds of loans out there, but tell me what the difference is between this HELOC and a home equity loan.
With a home equity loan, that also is based upon the equity in your home and typically will be a second mortgage, just like a HELOC.
Okay.
Except with the home equity loan, it's a fixed amount that you will get the moment you close on it. Your payments are fixed also in terms of specific interest rate, and your payment initially is going to be higher. Conversely, with the HELOC, you're going to pay based upon the amount you have drawn on that HELOC. So you can get a HELOC, have no balance because you don't necessarily need those funds at the time, and then you'll only pay on the balance that you have drawn.
So from an interest rate perspective, are the interest rates typically lower on the home equity loan or the HELOC?
That very much depends. Okay. But on your home equity loan, that's a fixed interest rate. On a HELOC, typically that is going to be a variable rate that will be based upon the prime index, which as of our conversation is 6.75%.
Okay.
Plus a margin that the lender will determine based upon loan to value, bank relationship, a number of factors, that margin number can be a plus, or for really strong customers, it could possibly be a minus. So, and then that will fluctuate as the prime rate changes.
So given the differences in those two and the HELOC in general, what are the best, let's just say 3 best ways to use a HELOC?
The 3 best ways, and I'd say first and foremost, is using those funds for home improvement or renovations, things that are going to bring value to your home.
Okay.
And you may be able to write the interest off on your taxes if those funds are used specifically for your home. A second reason to use a HELOC is to consolidate debt, specifically high interest credit card debt, other things that you're paying on a monthly basis where you can find a lower rate on the HELOC and pay that off faster. So it reduces your debt to income if you're looking to apply for something else, and it can improve your cash flow. And then another thing is to have it basically is a safety net for unexpected expenses that may come up. It's not something that you're using, but you have there just in case something does come up.
Okay, so almost used as an emergency fund if you're having a difficult time building an emergency fund. It could be a temporary emergency fund.
Absolutely.
Okay. Well, those are three great ways. So let's flip that coin. What would you say is not a great way to use a home equity line of credit or a HELOC?
Well, there are a few things that you really do not want to use this for. And the first that I would think of is high-risk investments. Mm-hmm. Don't take this and go try to play the cryptocurrency game or stock trading, to do things that are going to be very high risk and speculative. Another thing to not do is to use it for luxurious vacations. And finally, you don't want to take out a HELOC for your everyday living expenses, because that's going to be a sign of some deeper issues that need to be addressed. And you can then use up the equity in your home where maybe you should have made some other decisions. So I would reiterate, high-risk investments, vacations, and everyday living expenses are not good uses of a HELOC.
So given your extensive experience in this industry, could you give us an example of maybe a client that you've worked with over the past number of years where you've had to advise them against opening a HELOC?
Now, interesting you asked that question. There was a customer was working with one of my loan officers, and HELOCs were very popular at that time. And I asked why she didn't put this customer into a HELOC. And this had been a long-time customer. She had done multiple mortgages and HELOCs for in the past. And she said, I can't in good conscience recommend this to this customer because they use a HELOC like an ATM. And so for them, fortunately, rates were low. So they would run the balance up to the limit. They would then refinance their first mortgage and the HELOC into a first mortgage. They take a HELOC, run it up again to the limit, and refinance. And so they did not have the discipline to manage the HELOC appropriately, and they were eating away at the equity in their home.
Sounds like that mortgage officer did the right thing and made the right recommendation for the customer. Greg, you gave us your top 3 best practice ways to use the assets from a home equity line of credit. And then you also gave us an example of how not to use a home equity line of credit. Are there any other maybe kind of middle of the road uses for funds from a home equity line of credit that you would recommend?
You know, Margaret, there are people that have used their HELOC as a source for their down payment on purchasing a second home or an investment residence. There are others that have used it to pay for college tuition instead of taking out loans to do that. And then others will use it for some unexpected one-time repairs, such as replacing a roof or replacing air conditioning units. Those would be some wise uses of a HELOC also.
Yeah, and I guess that those do sound like positive because you are investing. The one example, you're investing back in your primary residence. And then the other one, if you're using it for college expenses, you're investing in the future for child or grandchild. And then the other one, purchasing a second home. I recently just did that, and I did put a home equity line of credit in place to purchase that second home. I think those of us that live here in the Valley are always looking for ways to get out of the heat in the summer months. So that is a spectacular way to leverage that product.
I'm glad I didn't tell you that was one of the 3 bad ways to use it. But no, I think you made a wise decision. And for people, you know, sometimes it's a more economical way where they're not ready to take maybe, say, the tax advantages of having to cash out of some investments that they have, doing those things, and it can provide an avenue to accomplish their goals.
So we talked about ways we should and shouldn't use money from a HELOC. How would one go about setting them up? How far in advance should you be thinking about it before you would actually need it? What's the process?
Well, the process is much like a mortgage, but on a bit more simplified process with the bank. So I would contact my local banker and find out what the requirements they have for a home equity line of credit. Plan on providing, your 2 most recent pay stubs, your recent W-2s or tax returns, depending on if you're self-employed or have other forms of income that are reported on your tax returns. Many of them will do some form of an appraisal. Many times they can stop short of having a full in-person, but that might be required. And then it'll be completing an application. Most of the times it's something that can be done online. But I would plan for maybe 30 to 45-day approval process to be safe. And if you are even thinking about it, I would start the steps of applying for that home equity line of credit before you're going to absolutely need it.
Yeah. And I would assume just in case it takes longer than you expected or rushing at the end, that could potentially be a roadblock for whatever you were going to use the assets for.
So you'll want to apply for your HELOC and find out how much you qualify for, because the last thing you want to do, for instance, in a home improvement project or renovation, you have your quote in terms of what it would cost. Then you go look for your HELOC to pay for it and find out you don't have enough equity to pay for the project. So understand how much you'll qualify up front so that your plans and whatever you're planning to do with it are within the realms of how much you can get from your HELOC.
Yeah, that sounds like a very uncomfortable place to be if you're living in a home that's in the midst of a renovation that you can't finish. So Greg, when we were doing the mortgage segment, we talked a little bit about the discounts and rate benefits of our Gold account. Tell us a little bit more about how the benefits from that National Bank of Arizona account can benefit somebody that's potentially looking at a home equity line of credit.
Well, Margaret, specifically for the home equity line of credit, having the Gold account will reduce your interest rate by 0.5 point. And that's a significant difference in monthly payments. So it's a tremendous advantage to have the Gold account when you're opening a HELOC.
Great. And the Gold account offers a lot of other discounts and benefits aside from just the home equity line of credit and up to $1,000 credit on a mortgage application. There are other things too. So it would be beneficial to check out the link in this podcast to see all the other benefits of the Gold account. Everybody has a checking account.
Correct.
Why not make your checking account work harder for you?
The benefit is, as you said, everyone has a checking account.
Yep.
But when you need to do other banking or consumer loan options, there are benefits and perks that go along with having that Gold account. So it's definitely worth having as a customer of National Bank of Arizona or as a prospective customer of National Bank of Arizona.
That's great, Greg. Thank you so much for coming back and joining us again. Great information. Home equity lines of credit can be confusing, especially if you haven't done one before. So you did a wonderful job laying out the benefits and the cons of reasons and things not to use those funds for, and simplifying it for our viewers.
Thank you for having me. And the home equity line of credit can be a very valuable tool, but as with anything, it needs to be used properly.
Thanks for watching. That's it for today. So check out more episodes from your favorite podcasting platform or watch us on YouTube.